Good evening, ladies and gentlemen, and welcome to tonight's comprehensive business and finance briefing. Today, we focus on two pivotal developments reshaping emerging markets and global investment trends: Pakistan's ongoing ESG reforms in its capital markets and Africa's innovative initiatives to close the off-grid energy gap. These stories highlight how sustainable development, strategic investment, and financial innovation are converging to create new opportunities for investors, businesses, and communities alike. Pakistan's ESG reforms, advancing sustainable capital markets. In Pakistan, the Securities and Exchange Commission of Pakistan, or SECP, in partnership with the International Finance Corporation, IFC, has been actively engaging stakeholders to make Pakistan's capital market more investment-ready and ESG-aligned. The latest session, the second stakeholder consultation under the ESG Pakistan project, brought together a wide range of participants, including institutional investors, corporate leaders, financial experts, and civil society representatives. The discussions focused on integrating environmental, social, and governance principles into corporate strategy, disclosure practices, and investment decision-making. SECP Chairperson Akif Saeed emphasized the importance of creating a regulatory framework that encourages transparency, accountability, and sustainable growth. Our goal is not only to attract capital, but also to ensure that businesses adopt responsible practices that create long-term value for investors and society, he stated. The three-year ESG Pakistan project, supported by the IFC, is designed to strengthen corporate governance, improve reporting standards, and foster a culture of sustainability across Pakistan's capital markets. Activities under the project include nationwide stakeholder engagement sessions, ESG capacity-building workshops, and impact assessments using the ESG Sustain portal, which collects, analyzes, and reports ESG data from listed companies. By aligning with international ESG standards, Pakistan seeks to enhance investor confidence, stimulate responsible private investment, and position itself as a competitive market for global capital. Analysts note that the country's ESG reforms may also encourage cross-border investment from institutional investors who prioritize sustainability and responsible business practices in their portfolios. Furthermore, the project is expected to generate tangible benefits for corporations, including better access to finance, enhanced brand reputation, and improved operational efficiency. As ESG integration becomes increasingly important in global investment decision-making, Pakistan's proactive approach is a strategic move to attract long-term capital while ensuring the sustainability of its markets. Africa's off-grid energy challenge: innovative financing solutions. Across the African continent, millions of people still lack access to reliable electricity, particularly in rural and off-grid areas. In response, the IFC, in collaboration with the African Development Bank, AfDB, has launched Zafiri, a groundbreaking capital investment vehicle focused on expanding energy access in sub-Saharan Africa. Zafiri is part of the AfDB's Mission 300 agenda, which aims to provide first-time electricity access to 300 million people by 2030. The fund is initially capitalized at $300 million, with plans to scale up to $1 billion to accelerate investment in distributed renewable energy, or DRE, companies. These companies are critical for delivering last-mile electricity solutions to off-grid communities, but historically, they have faced a lack of long-term financing. By providing equity capital and technical support, Zafiri addresses this financing gap, helping DRE companies expand operations, improve infrastructure, and increase electricity and clean cooking access for millions of people. Early estimates suggest that the initiative could directly impact over 30 million individuals, bringing sustainable, reliable energy to communities that have long been underserved. The initiative has garnered support from key global partners, including the Rockefeller Foundation, Trade and Development Bank Group, and the Nordic Development Fund. Zafiri is not only a financial vehicle, it represents a strategic framework for sustainable energy investment in Africa, combining development goals with commercial returns. Africa's off-grid energy sector presents an untapped market opportunity for investors seeking both financial returns and social impact. By supporting DRE companies, investors can participate in projects that provide resilient, renewable energy solutions, improve local economies, and contribute to environmental sustainability. Experts note that as the African middle class grows and digital economies expand, demand for reliable electricity will continue to rise, creating long-term growth opportunities for early investors. Strategic implications for global investors. Both Pakistan's ESG reforms and Africa's off-grid energy initiatives underscore the increasing importance of sustainability, transparency, and long-term value creation in global investment decisions. For institutional and retail investors, these developments highlight several key takeaways. 1. Emerging market opportunities. Pakistan's alignment with global ESG standards improves access to foreign capital and positions the country as an attractive destination for ESG-conscious investors. 2. Sustainable infrastructure investments. Africa's DRE sector, supported by initiatives like Zafiri, offers opportunities to invest in resilient, renewable energy infrastructure with measurable social impact. 3. Risk mitigation. ESG integration and transparent governance practices reduce investment risks by ensuring that companies adhere to responsible business practices. 4. Long-term growth. Both initiatives demonstrate that sustainable practices are increasingly linked to economic performance, investor confidence, and market stability. Global financial experts increasingly recognize that capital allocation is shifting towards sustainable and impact-driven projects. Companies and projects that embrace environmental responsibility, social equity, and strong governance are more likely to attract capital, maintain operational resilience, and achieve long-term success. Conclusion: a new era of sustainable investment. Ladies and gentlemen, the developments in Pakistan and Africa highlight a pivotal moment in global finance: the convergence of sustainability and investment opportunity. Pakistan's ESG reforms are creating a more transparent, accountable, and investor-friendly capital market, while Africa's off-grid energy initiatives are addressing critical infrastructure gaps and enabling sustainable growth. For investors, policymakers, and stakeholders, these stories offer a clear message. Responsible investment is not only ethically sound, it is financially strategic. By embracing ESG principles and supporting renewable energy initiatives, investors can generate returns while contributing to long-term societal impact. In a world increasingly defined by environmental challenges, social responsibility, and governance expectations, Pakistan and Africa are demonstrating that emerging markets can lead the way in sustainable, investment-ready solutions. These initiatives represent not only opportunities for financial growth, but also tangible improvements in the quality of life for millions of people. Thank you for joining us this evening for this detailed business and finance briefing. Stay informed, stay strategic, and remember, the future of investment is sustainable, inclusive, and resilient.